Hey, thanks for joining us today. We really appreciate your time. My name is Peter Wright. I work for a company called Rock the Score. You can go to our website called rockthescore.com. We have a credit reporting program. We report rental history to the credit bureaus and help your clients increase their credit score organically, which can, of course, open up many, many doors for them in the world of credit. So let's jump into the webinar. We're going to get this started right away for you. Again, thank you for joining us today. We really do appreciate your time. Rock the Score provides a credit solution for renters, people that are renting their home. We are going to help people raise their credit score, hopefully significantly, simply just by paying their rent payments, a payment that they already make. A lot of credit restoration companies out there, a lot of different companies also offer secure credit cards, which is a great thing to do. Credit utilization is very, very important in the grand scheme of things, but adding a secure credit card to your credit report is going to take time. It's going to take time for that credit to build over the period of months. With rent reporting, we can also do exactly the same thing, but we can also go back in history. We can add a 24-month history of credit to the credit scores, to the credit bureaus, and that will impact the credit scores literally in a matter of weeks. So who reports rent right now? Well, TransUnion doesn't. Equifax does not. Experian does not. We do that. So we actually force that information to the credit bureaus. If you think about it, there are thousands and thousands of landlords across the United States. It would be impossible for the credit bureaus to contact each and every one of them and get that rental data, that rental information, and report it on the credit report as a trade line. So the information has to be pushed to them, and that's what we do. So how does it work? Renters continue to pay their rent in the normal way. Nothing changes. We report those rent payments and we report them to the credit bureaus. By providing a positive trade line, it's going to help folks improve their credit profiles, and it's going to organically increase their credit scores for these renters. We can even report the past 2 years of historical payments, and that will give an immediate boost on a credit score in literally a few weeks. So you might want to be a homeowner. Maybe you want to qualify for a lower mortgage rate when you're a homeowner. A good credit score will do that. PMI, private mortgage insurance. The PMI companies now even look at credit scoring when they're looking at the premiums on a mortgage. PMI is when you have less than 20% down on a mortgage, you pay something called private mortgage insurance. Again, the PMI companies look at those credit scores when calculating the premiums. Lower closing costs. Lenders are looking at credit scores to determine interest rates and closing costs. So you can actually save a lot of money by having a good credit score. Even insurance companies now pull credit prior to issuing homeowners insurance or car insurance to see what your credit score is. So your credit score is also determining how much you're going to pay on insurance premiums. Maybe you don't want to be a homeowner. Maybe you want to get a credit card, something as simple as getting a credit card and qualifying for credit. A great credit score is going to allow you to do that and get a really good interest rate on that credit card. Did you know 60% of employers now pull credit prior to hiring? So your credit profile is out there. Maybe you want to buy a car, finance a car. Again, interest rates are determined on credit scores. Maybe you just want to get a better credit score. It's not a bad thing to have in life. Already talked about this a little bit. A higher credit score is going to equal a lower mortgage rate. A lower credit score is going to equal a higher mortgage rate, and that can be pretty significant in some instances. This is a very, very interesting slide, and this is courtesy of MGIC, which is a mortgage insurance provider. And if you look at this chart, if you have someone with a 639 credit score, which is a decent score, maybe they're putting 5% down. Well, at 25% coverage, their PMI premium is going to be based off of 1.21% of their loan amount. Let's go up about 40 points. Let's go to a 680 credit score. that premium now drops to 0.85%. Pretty significant drop. What does that mean in dollars? Well, it means about $60 a month. That's $720 a year just in PMI insurance premiums. And that is assuming the mortgage was even approved with a 620 to 639 credit score, because sometimes they're not. Sometimes underwriters like a higher credit score. In fact, they all like a higher credit score. Did you know there's over 140 million renters in the United States right now? So it's a huge market for the real estate community. It's a huge market for the lending industry to try to tap into some of those renters and help them become homeowners if that's what they really want to do. Again, another interesting statistic. Renting right now is almost at its height. It was at its height in 1965, where 37% of household heads who rent their home, that number is approaching that right now in 2018. An increase in renters over the past decade does not necessarily mean that home ownership is not desirable to many of these renters. And 72% of renters said that they would like to buy a house at some point. Big number. 65% said that they currently rent as a result of their circumstance. Well, what's as a circumstance? Maybe it is a down payment. Maybe it's credit. Maybe it's a low credit score. We don't know. But 65%, which is a big number, rent as a result of their current circumstances. About a third of the people that rent said they do it as a matter of choice. Maybe they are in transition. Maybe they're only on their job in the local market for a few months or a few years. They don't really want to buy a house because they don't want to sell it again. When they asked about specific reasons why they rent, the majority of renters, especially non-whites, cited financial reasons, which probably means credit. We're in the St. Louis market. I know there's people on the call from all over the country, but we're in the St. Louis market. You can look up these statistics in your own market. Our market has, in St. Louis City, about 44,000 renters. In St. Louis County, it has about another 94,000 renters, a huge market opportunity. The average US rent payments right now, a one-bedroom apartment is nearly $900 a month. A two-bedroom apartment is $1,100 a month. So these renters are paying big money in order to rent. So the question becomes, should you rent or should you buy? Well, that $900 a month rent payment over 5 years, you just paid your landlord $54,000. If you're in that two-bedroom apartment, $1,100 a month, you just paid your landlord $66,000 if you're in that property for 5 years. So big numbers here. This might be another reason why a lot of younger people are renting, because the credit scores show that they are lower with age. It's like a fine wine. They get better as you get older here. 30 years or younger, had 38% of them had a 621 score or lower. It actually gets worse with ages 30 through 39. It's jumping into the 40% there. But as you can see on this graph, the older you get, the better the credit score becomes. So we need to help the youth of America, especially if they're renting and they want to buy. How do we help them build those credit scores? Well, the lending industry has thresholds of credit. FHA typically will go to a 580 credit score. Some lenders are a little bit lower, some are a little bit higher, but typically you're looking at a 580 credit score before you're in that conversation. A conventional loan will require a 620 credit score. Fannie Mae and Freddie Mac require a minimum credit score of 620. VA, again, this is subject to lender approval. Some have slightly higher thresholds, some have slightly lower, but basically 580 for VA and also 580 for USDA loans. So let's talk about adding rent payments to that credit report. By adding rent payments, you will boost the credit score as long as they're obviously on time. We can also go back and report the past 24 months history of rental payments. That is typically reported in 7 to 10 days. It can run a little bit longer. We are at the mercy of the credit bureaus on how long it takes them to do that. Just recently, they've been running up to about 20 days, so it can run a little bit longer than that. But on average, we're looking at 7 to 10 days before it pops onto that credit report. It will have an immediate boost to that credit score. It also creates a seasoned account, a seasoned trade line. Very, very important for the mortgage industry. Some mortgage loan programs require 2 or 3 seasoned trade lines for 12 or 24 months. If you don't have that, you're not eligible for the mortgage program. So this could create that seasoned account that you need in order to qualify for one of those mortgage products. Also, your credit score will be higher. You'll be qualifying for a lower interest rate and or lower closing costs. It also creates less paperwork for mortgage loan originators and also mortgage underwriters. Right now, to verify rent, you are required to provide the last 12 months, 24 months of canceled checks or bank statements in order to provide that. Well, if it's coming directly from the credit bureaus, there really is no need to collect all that information. So it can save a lot of time and a lot of paperwork. So loan officers, underwriters love the program. This is a segment of how credit is made, and we are impacting a minimum of 35% of your credit score. If we are adding historical credit score, then we just added history, which is another 15%. So we could impact up to 50% of this algorithm. Huge, huge benefit. So a great credit score can change a no into a go. Maybe you've been denied for a loan. We can change that around for you. It can help you become a homeowner if that's what you want to do. And for all the lenders and real estate agents on the call, it can create more leads and closings for you. So we talked about this a little bit earlier. Let's look at the difference on a mortgage between a 639 credit score and a 680 credit score. To get the same interest rate, let's say the interest rate is 5% at a 680 credit score. At a 639 credit score, to get that same interest rate at 5%, you would need to pay $3,800 at closing. That's based on a $200,000 home purchase with 5% down payment. That's a big number. Private mortgage insurance premiums, we talked about this a little bit earlier. Nearly $60 a month difference in premiums, and that's every month. Homeowners insurance, this information is courtesy of Liberty Mutual Insurance. They provided us these numbers based on someone with a 640 credit score or a 680 credit score. Same house, same zip code, difference of about $40 a month. So you're saving about $4,000 in closing costs, and you're saving about $100 a month in premiums just by changing your credit score about 40 points. Pretty significant. TransUnion, a renter can be a tenant leasing from a management company. It can be a tenant leasing from a private landlord. It can even be your kids living in your basement. So TransUnion is pretty liberal with the tenant-landlord relationship. We also report to Equifax. Equifax is not quite as lenient. You must be leasing from a management company in order for us to report this to Equifax. So those are the two rules. Experian does not report this right now. A renter must provide an executed rental agreement in order for us to report this to the bureau. So we do need a signed rental agreement between tenant and landlord. We need the contact information from your landlord. We will be contacting them to verify the rent history. We also need a photo ID from the renter to verify identity. Once we have all that information, the rent payments are reported to selected bureaus. A rental trade line should appear on the credit in about 7 to 10 days. And 24 months historical reporting can also be added, and that creates a significant increase in score. And you can do that by just waiting for the credit report to be reissued 30 days later, Or you can contact your lender and ask them to do a rapid rescore for you. Your lender will know what that is. And on the historical reporting that we do with TransUnion, we only report positive credit history. So if they were late, say we've got 24 months of history, but they were late on the 20th month, we're going to report 19 months. We only want to report positive history for your clients in the historical reporting environment. Moving forward, month by month, if they're late, we have to report it late, just like any other account. More details, the cost of the program, $25 to enroll for the program. We charge $8.95 every month for rental reporting moving forward. If you're looking for the historical reporting data, we can go back up to 24 months. That's going to cost a one-time fee of $99. Clients can cancel this at any time. So the $8.95 moving forward, they can cancel that once they are comfortable or happy with their credit score, or maybe they've purchased a house and they're not renting anymore. It is important, however, to keep that account open. We don't want a closed account. A closed account can actually hurt your credit score a little bit. So it is important to keep that account open if you're still renting. So I just wanted to mention that. We are also looking at adding cell phone reporting to the credit bureaus next year, 2019. So coming soon. We don't know when, but we are working diligently on that. So enroll your clients and we'll track them for you. Build a pipeline of clients, increase your business, close more deals. We even have an affiliate agent program that will create more leads and closings for you. We can give you your own splash page or landing page. So clients that do enroll through your landing page will be tagged to you. You'll be able to get reports on that. You'll be able to see who has applied for this program through your own landing page. It's a great program, and also it gives you a tracking and marketing mechanism. We can do branding and co-marketing with you on this to help you build a pipeline of clients, which is very, very important. And it will create more leads and more closings for you. This is an example of what the landing page or splash page looks like. They can enroll directly from that. If they do that, then we know where that came from. It will have your own unique URL built into the background on there. So we know exactly where that client came from. We'll be able to send them right back to you when they are ready to close on a home or buy a car or whatever they're looking to do. There's lots of marketing opportunities with this, and we are doing this ourselves, but there's marketing opportunity for our affiliate partners also. How about sending postcards out to renters or apartment complexes? You know, we just looked up 3 or 4 really big ones in our local market where people are paying $1,000, $1,500, $2,000 a month. Why are they paying that? But let's reach out to these people and let them know that their on-time rent payments can now help them boost their credit score. And maybe that turns them into a homeowner down the road. Real estate agents and loan officers, you should collaborate on this. Get together, do some joint marketing opportunities. Let us know if you need any help with that. Insurance agents, think about this aspect. Insurance agents have a book of business. Part of their book of business is rental policies. How many rental policies do they write in a local area or even nationwide? Let's tap into those rental policies and let those renters know that if they are looking to purchase a home in the future, or maybe they're just looking to increase their credit score, we know they're renting because they have a rental policy. So why not report that rent to the credit bureaus and help them build their credit score? Hey, it may even improve their insurance premium on that rental policy. Credit repair companies are another one. Credit repair companies do a fantastic job of helping people build credit through opening secure credit cards and things of that nature. Credit repair companies also do a great job of deleting items from the credit report, disputing, going through the dispute process with the agencies. That's great because removing derogatory items from the credit report will help that score go up organically. But we want to add positive history on there too. And as we'd mentioned before, doing secured credit cards and things of that nature will help over time, but it will take a while. But if you have been renting for a year, 24 months or longer, we can take that history and add it onto the credit report and have an immediate impact on that credit score for you. We enroll renters all across the country on this program. Many are not working with a lender or a real estate agent yet. We affectionately call these our orphan clients. They will need a real estate agent at some point. They will need a lender at some point. So we're going to be having a lot of home buyer leads come through this platform over the next few months, next few years. If you want some home buyer leads, get in touch with us. We'll talk to you about our referral program on that also. Go to our Facebook page. I want you to like that. It's called Rock the Score. So please go to that Facebook page and like that. We also have a YouTube channel. It's called Rent Reporting. So go to that and join that. We're going to be posting lots of videos on that in the upcoming weeks, upcoming months. So we'll have lots of really cool information on our social media sites. But yeah, join our Facebook page, join our YouTube channel. And if you need information on our affiliate program, please let us know and we will send that information out to you right away. Start enrolling your clients. Do that today. You can go to our website at rockthescore.com. If you need any information from us, feel free to shoot me an email. My email is pwright@rockthescore.com. Again, visit our website and there's lots of information on that website, including frequently asked questions, cancellation policies, all kinds of cool stuff. There's a neat video on there too that explains the program in about a minute 20 or less. So great information there. Hey, we really appreciate you joining us on the webinar today. Thank you for your time. Let us know if we can help you.